Hey everyone, welcome to the Walk to Wealth podcast. If you're tuning in on YouTube or any of the podcast directories, we just ask you one teeny tiny little favor. Just make sure to leave us a follow so I can keep on bringing amazing guests and so that you don't ever miss a beat. Without further ado, let's get right into this one. Todd, for anyone that doesn't know you, tell us your elevator pitch. Who are you and what do you do?
My name's Todd Rampe. I'm the founder of the Wealth Builders Institute in Las Vegas, Nevada. And I teach people how to make money trading stock options from home.
Amazing.
A lot of times people hear that and they go, oh, options, that's confusing, complicated. It's not. And we'll talk about it in a little bit, I promise you.
Amazing. So Todd, I think one thing we always love hearing about is our guest Walk to Wealth. And I think a great place to kind of start it would be, what does the topic of money, what does the topic of finances look growing up in your household during your early childhood?
Well, first of all, I'm an old guy. So I grew up I was a kid in the late 70s and 80s and came from a middle-class family. You think back, or at least when you're in those times, you think, oh, everything is good, but you don't realize how much your parents struggle sometimes to put food on the table and all that. I've got 3 siblings that I grew up, 3 sisters.
Mm-hmm.
Dad did pretty well, but it was more towards later in life. I've always been an entrepreneur. I've always worked hard. I went to work on a farm when I was 13 and worked 7 days a week. Got my work ethic there. I can't sit still. I've been here. I'm sitting in here in my office and I got here this morning at a little after 4:00. My wife thinks I'm crazy, but I get up and I'm ready to go. So, but anyway, it's to me, entrepreneurship and the money aspect of it, you do it for one reason. In my case, you do it for the freedom. You know, everybody, I want the fancy car, the fancy house, that all comes with working hard and doing things intelligently. But the reality is you want to be able to do what you want, when you want, with whomever you want. And that to me is freedom. And it takes money to be able to do that. So you got to go out there and make it.
Yeah, no, definitely. That's a great definition of freedom, by the way. A couple points I want to dig a little bit deeper before we dive into today's conversation, just out of curiosity. You mentioned that you were always an entrepreneur. Now that I'm being a guest on other shows, that I wasn't your typical entrepreneur. I didn't have the paper route. I didn't have the lemonade stand. When did you know that you were an entrepreneur or growing up?
I used to drive my dad crazy. I would always come home, even though I worked every day, I would come home and say, hey, I've got this idea about something. And it got to the point where he would say, all right, what is it this time? You know, and I didn't really have any direction. I didn't have a lot of support when it comes to cultivating a kid with an entrepreneurial mindset. I tried a bunch of different things. I did have the paper route, as you said, to mention. I didn't have a lemonade stand, though. I didn't think that you can make enough money selling one little cup at a time. It wasn't worth my time sitting out there. But working towards something, they always say, you know, what's the line? You do something you love and you never work a day in your life, right?
Yeah.
It's kind of hard when you're young because you want to make that money and you just want to try a bunch of things that hopefully one of them will click.
Yeah, and that's a great point. It's doing something that you love. It's something that's hard to do, especially early on, because it's like, well, do you even know what love even means? Like, we're still trying to figure everything out. And so it's like, we always have this idea. And now that you mention it, for me, I was never an entrepreneur until about 2 years ago. That's when I read Rich Dad Poor Dad and then my whole mindset shift. But like, I always had ideas. None of them were about making money. I was always very creative mentally. And that wasn't until I read Rich Dad Poor Dad and I shifted the topic from just random idea to like money that I was like, oh, you know, this kind of all makes sense. It's kind of stuff that I've already just kind of been doing my whole life, just never applied it to entrepreneurship at all. And now I think this is a great segue into today's conversation. So you mentioned doing something you love, you never work a day in your life. When did you realize trading was that for you? When did you realize stocks and things like that was the thing that you love to do? Was it something that you kind of picked up in high school or early on in your life, or something that you picked up later on?
No, I've actually been doing this for almost 25 years. And I had a business that I was a car wholesaler and I used to ship cars to Europe. And ended up selling the business. And I didn't know, I told my wife at the time, I said, I don't know what I want to be when I grow up. And I was 33 or 34. And I got something in the mail. This is before the internet. So I got this pamphlet in the mail, learn how to trade. I'm like, I'm going. So I called him, I gave him my credit card and I paid, it was like $5,000 too. It wasn't cheap. And flew to Dallas, sat there throughout the seminar. It was a weekend seminar, two days in a row, Saturday, Sunday. And I didn't understand one word the guy said the whole time. I mean, I just sat there in spin dry thinking I was fighting to keep my eyes open. It was so complicated. And I thought, well, maybe I'm not going to make it. But I got lucky and met a guy who was trading from home and very, very successful. I've nicknamed him my 7-figure mentor. You can figure out why. So I begged him to teach me how to do it. And at first he said no. And the second he said no, I thought, this is the guy I want to learn from, because he doesn't want to teach anybody. He's not out there trying to make a buck selling his knowledge. So long story short, I did that. I used to fly out and see him every couple of weeks. And I did that for about 5 months. And he taught me a very basic way to trade. And he made me realize that you don't have to do things complicated. The old acronym, keep it simple. I like to say student, and if you keep something simple and you can just figure out the ups and downs of that one particular way of doing things, you're usually pretty good. And I tell my students all the time, we don't teach any of those complicated strategies, because when you have something that works, you don't need anything else. Why waste your time? And so that's pretty much the mindset. But I've been doing this for a long time, and out of the gate doing very well, which can be a blessing and a curse. You think every trade's going to be a winner when you come out of the gate like that, but you learn. You don't hang around in this business long if you don't like following the rules and you're not disciplined. So
yeah, definitely. I think Bruce Lee said something along the lines of, I fear not the man who practiced 10,000 kicks one time. I fear the man who practiced one kick 10,000 times, right?
You got it.
I love that you brought that up. And I wanted to ask you about getting a letter in the mail and flying out, right? A lot of people nowadays, it's almost impossible to convince them to try going to a summit. They'll get $160,000 in student loan debt, but it's like trying to convince them to go to this $200 summit, or maybe it's like $500, maybe it's $1,000, right? You're just like, some tickets are relatively inexpensive, but to some people may come off as expensive, right? But it's like, what made you, from something that was just a cold email, mail letter that someone sent, it allowed you, is that something that you just had within, like you were already looking to get into the next opportunity and that was your sign? Or like, what made you kind of take that leap of faith?
To me, I've always been a risk taker, but I'm not a risk taker in the gambling sense. I live here in Las Vegas. The Strip is 20 minutes that way. And I'm not a gambler. I don't like gambling. I won't even go, because to me, the odds are so against me. It just doesn't make sense. I can sit in front of my trading computer here and kill it, just do an incredible job with it. But I don't know. I've always had the belief that if I'm looking at someone and I see they're doing it, my attitude is, if you can do it, I can do it.
Yeah.
And in most cases, in my opinion, it might sound a little, egotistical, but in my mindset, it's like, well, if you're doing it, I can do it a little bit better. And so I don't have that fear of trying things new. I like change. As a matter of fact, I love change.
Yeah.
Some people grow up in one little town and they never leave that town. And I don't know how people do that. I like to go around and see things. And so when I saw that and read that pamphlet, it wasn't a difficult decision for me.
Yeah. And I like the fact that you said like, going around and moving around. I feel like maybe because I'm like a hybrid entrepreneur where I came into this late in the game, where like for me, I love traveling, but I love the idea of a home base, even if I'm never there.
Sure.
So like, I kind of like, I may always have some roots in Connecticut, but it's like, I want to see the world. I want to go out there just like you. I want to see new experiences and change things. I want to take the risk. I want to live new adventures and things like that. I want to touch upon the point you mentioned, keep a simple student, right? Because we're always student of the game, no matter how successful we become, right?
That's
no matter how many successful trades or successful podcasts or successful whatever endeavor we're in. And we're always going to be a student of the game. So before we kind of dive into the topic of trading, a lot of people never get into it because of misconceptions, limiting beliefs, whatever they may be. From what you've noticed and what you've experienced teaching tons of investors, what are some of the main misconceptions that keep people out in trading that are just myths and just like point blank, not true?
Number one, a lot of them think that you need, I'll call it an Ivy League education. Number two, they think you need some kind of Wall Street experience or an investing experience. And number three, they think that they need a ton of money to do it. And none of those are true. I can literally take somebody off the street that's never even looked at a chart, teach him how to do it within 60 days.
Really?
And with an investment, I tell my students all the time, listen, you need at least $5,000 to do this. Now, to some people, that's a lot of money. But think about again, the freedom that will buy you, provided you follow the rules and do everything that you're supposed to. And what you can do with this business, I call trading the best business in the world, because you can start off with that kind of an investment, which really is a drop in the bucket compared to a brick and mortar store or a franchise. Off the charts expensive. You're married to the business. You're there 7 days, all of that. And that to me is no fun. And then at the end of the year, you kind of hope that you did well when you can pay the franchisee back or franchisor, whichever they are.
Yeah.
But trading is like I said, the best business in the world. And what I love about it is that you can start off small, learn how to do it, and start scaling. And I've got a handful of students now that are making incredible amounts of money, more money than I ever thought that they would make. I never thought that any of my students would ever get to that level. And I hate talking about big numbers because a lot of people think, number one, they say, BS. Or number two, they'll say, yeah, well, he's the one or she's the one exception. I understand that. There's always the overachievers, the top performers. There's the middle of the pack. And then there's the people that just sit around and, what's the old line? Something about people that make things happen, watch things happen, wonder what happened. Yeah. And that's a lot of the people, unfortunately, people are lacking drive these days. I think too many things are handed to them, so they don't really do what it takes to make it.
Yeah, I love that you brought that up. And it kind of reminded me of this quote. It's a Bible verse, and it's something along the lines of, to those who have everything, all will be given. Yep. And to those who have nothing, all will be taken. And it kind of goes back to show that there's a weird kind of discrepancy that they have. But like you can't blame the overachiever for wanting more than what you have and not being okay with the level that you're at. It's something that even before I realized that I'm an entrepreneur, like I just always had this bug, like even back to high school basketball. I always tell people I thought that was the NBA finals. If you're on my team and you're not ready to ball, don't play on my team, get the next game, because if we got next, we're coming in hot. We're coming. And then I've always been like that, even with video games, everything. I've just always been so very high achieving. It's like, those are the same people that get all the riches and the success and the accolades and everything like that. And not saying that if you don't get it, it's not a good life, but you can't point your finger at the guy who wants it more than you do and then try to blame the system, whether it's trading system or the government system or the real estate system or the IRS, whatever it may be, whatever thing you choose to point at. But I kind of wanted to ask you.
You're competitive. You're competitive, and that's in your nature. And that's one of the prerequisites for being a successful entrepreneur. If you're not competitive within yourself, how can you expect to be competitive with somebody else who is?
Yeah, exactly. It's something about, and I want to hear your viewpoints on this, but at least for me, I could say that it's always like, how can I be the best me that I can be? And it's something that never stops beating in my head. The thoughts never leave my mind. There's never really a moment where it's like that I'm not trying to put my all into something, whether it's just working out or just a casual timeout or actually trying to do business. Whatever I'm doing, it's something inside you that you can't shut the button off. I can't really describe it or put it in words because I'm still relatively new to the entrepreneur world, but it's just something that you just can't turn off.
No, you can't. Like I said, I was up at 3:30 this morning. Would I have loved to sleep until 6? Yeah. Wake up at 3:30 and it's like, I'm thinking about everything to do with a business. And I've got a fantastic crew here, fantastic team. Mm-hmm. And I really don't need to think about it that much, but you can't shut it off.
You can't, right? I think it's a great segue into today's conversation, right? So trading, right? What is trading? What isn't trading? What is speculation? I think this is a great place to start because a lot of people and this is coming out at a time where all the GameStop hype and the AMC hype, all that stuff has died down by now. But what is trading? What is speculation? What's the difference for anyone that wants to get into trading and doesn't know where on earth to start?
Well, obviously, I'm going to give you my opinion, right or wrong, but I'm going to say that speculation fits more under the category of gambling. Hey, I want to buy Apple. I'm looking at Apple stock right here. I was trading it earlier this morning, and I look at Apple right now. And as a speculator, I think it's taken a beating lately. I'm going to buy it. And I'm going to hold it. Let me just back up. There's 3 types of traders. There's day traders, which is what we teach. There's swing trading, which means you buy the stock or the option. You hold on to it for a day up to a couple of weeks. And then there's buy and hold, which is what everybody knows. I've got an IRA. I've got a a retirement account, or I've got something where they take 10% of my checkout, whatever it is. Yeah. You're going to buy this basket of stocks, and hopefully in 20 years, it's going to be worth a lot of money. But to me, that is the type of trading that you are in the least control.
Yeah.
And so a speculator, it's like, I'm going to buy it. I'm going to hope that it goes up, and I'm going to go on about my day. A trader looks at the market typically on an intraday basis and says, you know what? I'm going to buy it at, and actually I use my charts right here. I'll show you, talk about some of the trades that I took today. And my charts are all on the East Coast time, even though I'm in Pacific. So this morning I bought Apple at about 134.30 a share. I held on to it for, what is this? That was at 9:45. I sold it about 10:20 for 136, about 136.50. So it's a couple dollars a share. Now, but some people go, well, that's not a lot of money. Yes, it is. Because when you trade options, one contract controls 100 shares. So I teach my students to start off trading 10 contracts because you're now controlling 1,000 shares. And you mentioned that in the very beginning of this, that anybody can control 1,000 shares with literally less than $3,000. And right now, Apple's trading at 136.26 right now, literally to the penny. So if you want to buy 1,000 shares, you need $136,000. And I jokingly say, by a show of hands, how many people have that lying around that they can go buy 1,000? You hear crickets, right? So being able to control that number of shares with a small amount of money, getting in and out throughout the day, that's a trader. They're getting in, expecting the price to go up. And earlier you said something about calls and puts. That's confusing. It's not. If we think the price is going up, we buy calls. If we think the price is going down, we buy puts. That's it. That's all you need to know. I mean, when I say that, that's all you need to know in terms of the options definitions aside from the other basics. But that's pretty much it.
Yeah. So let me ask you a little bit. What are the kind of like the core philosophies that you hold near and dear to your heart when it comes to this topic of trading? Because for day trading, prices, as you already know from your experiences, they go up and down, they fluctuate. Sometimes you come in a second too late, especially it may be a lot harder. You're in Vegas, so you're used to the time difference now, but someone who is brand new to it now, they also get used to the time zone switch and everything like that because they're a couple hours behind. What are some of the core philosophy that you've picked up along the way, maybe that your 7-figure mentor has taught you that you still hold near and dear, that helped you find success earlier on and even now to this day?
First of all, as a trader, you're going to be wrong a certain percentage of the time. And the way that I describe my software is called Triple Sync Logic. And we teach the TSL method of spotting intraday market reversals. What that means is professionals move the market all day. If they didn't move the market, you'd see the price of the stock flatline all day. But they're constantly buying it to push it up, selling it to push it down, to pick the pockets of everybody sitting at home trying to make a buck. And my mentor figured out a way to know when they're about to make their move so we can participate. But the key philosophies are you have a set of rules and you don't change your rules regardless of the market conditions. Regardless, there are 3 types of markets. There's trending, meaning that it's either going to go up or it's going to go down for a significant amount of time. It's cycling, so it kind of looks like a roller coaster. And then there's sideways choppy. Now, the sideways choppy market is where most people lose their money because they don't have a plan. So what I teach is a way to trade all of those markets. And here's the key. The number one philosophy is the rules are etched in stone. They're never going to change. They haven't changed for me for 25 years. They still work. They work in the bear market, bull market. It doesn't matter. You just can't let the losing trade discourage you and take you off your game. And again, when our rules line up 75% of the time, the price changes direction. Now, I didn't say that all of my students are right 75% of the time. Most of them are that follow the rules, but there are a lot of people that decide they don't want to follow the rules. If I put you behind the wheel of a Ferrari and said, hey, there's nobody on the road, are you going to do the speed limit? Probably not. And it's the same thing when they learn how to do this and they go home, they're sitting in their home office and they shut the door and there's nobody watching over their shoulder. They can quickly turn into a gambler if they want to, because nobody's there to hold them accountable. So number one philosophy, follow the rules, do not deviate, regardless of what the market is giving you for that day. Not every day is going to be a home run.
Yeah, no, definitely. But let me ask you, because this idea of day trading is something that it's such like a shiny object for a lot of people. It's something that definitely captivates. And seeing the quick profits, it's like that dopamine hit is comparable to like almost social media. You know, to get in that dopamine rush when you see like a reel is almost like identical to a successful trade. And even when as I said, I tried trading for maybe like a week, and I was using just practice accounts, and I realized pretty quickly that it wasn't for me. But even in the practice accounts, when you're playing with fake money and you hit a trade and it's just like, this feels pretty good. Yep. It's like, what mental, I guess, maybe blockage would be a right way to call it. Did you have to put in place kind of maybe you didn't have to experience it, but for someone who does get easily swayed by that dopamine hit, by that successful trade, what kind of things do you have in place? Because as you said, there's no one checking the speed limit, right? You could keep on driving as much as like, what kind of mindset shifts or blockers does someone have to put in place so that they don't fall victim to that adrenaline rush when they do get a successful trade?
Emotions play a big part in trading. And I mean, a huge part, because you are putting your hard-earned money on the line. And you talked about paper trading or trading monopoly money.
Yeah.
It's a world of difference. If you sit down and you're trading they call it a sim account or a demo account, that fictitious money, you'll do things that you wouldn't normally do if you had skin in the game. So you kind of run a little bit wild. And the analogy that I use is like if you and I were at a barbecue and out in the backyard and somebody put a 2x4 on the ground and said, "Hey, John, walk across that 2x4. You'd be like, "Okay, no problem."
Yeah.
Well, if they raised that 2x4 100 feet in the air, hoisted you up there and said, "No safety net, no harness, now walk across it," you probably couldn't do it.
Yeah.
Unless you're one of the flying Walendas from the circus. And that's the difference. When you're up there, when you have a real money in the trade, that's what it feels like. Your emotions take over. You know, that fight or flight, you get nervous and you want to protect yourself. Whereas it's on the ground, you don't care because you can't get hurt. That's the fake money. That's the monopoly money. The mindset is very important. And I think the best way to kind of attack it and keep it at bay is to start off small. Too many people, a little quick story. People come to visit. We go down to the strip, walk around. I can't even tell you how many times I've walked up the strip with a friend of mine, and you hear a couple where typically the guy says to his wife, "Hey, honey, I'm going to go in and gamble. You go check out something else." And she says, "Don't lose a lot of money." He goes, "Don't worry. I have $500 in my pocket. I won't. That's it. That's the limit." She goes, "Oh, fool." And then he goes, "And what do you think he's going to do? He's going to sit there until that $500 is gone. He's committing to it. It's in his mind that money's gone, but he's hoping that I say putting your hands together and praying. That's not an indicator in the trading world. Hope and prayer are not an indicator. That's not a strategy to beat the casino either. But they think they start dreaming about it. Well, maybe I can do it." So going in with that mindset of starting off small, protecting your profits and don't deviating, to me is really the key.
Yeah. So then, right, when getting into this, right, you mentioned some core philosophies, some mindset shifts. And now we're like ready to hop in. You mentioned $5,000 minimum. And let me ask you, that because that's what you had to do back to when you first took your first trip out to learn about trading? Or is that because it's just an actual decent amount of money to start playing around with if you actually want to make some moves to start off?
It's a good place to start because it's enough money to give you decent returns. Now, that doesn't mean, I want to clear something up very, very quickly, is that doesn't mean that you're going to take your $5,000 and put it on every trade. The way we teach our students is you're going to start off trading one contract, which realistically is going to cost you, your investment's about $300. You want to have the 5,000 in the bank though, because if you're trading the rent money, the mortgage money, or you're going to lose. You don't have there's an expression, scared money never wins. And if you take your last $300 out of your wallet and put it on the table, you're nervous. You're not going to make the best decisions. So you want to have a little nest egg, and 5,000 really is enough that if you lost $200 or $300, you wouldn't be crying in your coffee the rest of the day. You just look at it and say, "Well, I made a mistake. I've got to back up and follow the rules and do things right next time." But I think 5,000 is pretty much the minimum.
Yeah. Okay. So then let me ask you another question then. Right. Because when it comes to trading, you mentioned options a little bit. Options for someone that, like myself, doesn't really know about too much trading, it seems as if that's like once you graduate, right? The regular trading were like one stock, you just like, I guess, primary school, and then the stock option, that's like, at least in my mind, like college level. Once you graduate high school, then you can go there. Would you recommend option route to start off, or would you recommend trading
absolutely.
first?
Absolutely. Okay. I said earlier that if you were to buy 1,000 shares of Apple, it'd cost you about $136,000 right now, where you can start off. Now, yes, you can buy one share of Apple, $136 you're in. When it moves 20 cents and you feel like you did a good job, you're going to look at 20 cents in your hand as a profit. It's not that exciting,
Yeah.
but if you invest $300 and you're controlling 100 shares and it moves 20 cents, you can make $10 or $15. Now, relatively to that 20 cents, it's a heck of a lot more. It's still not a lot of money, but it's a good place to start. And we talk to two types of people. And I say this kind of jokingly. There are two types of people in the world. There's traders and everyone else. And everyone else, I can't go anywhere without somebody saying, "Hey, what do you do?" And I tell them, I teach people how to trade stock options. The number one response I hear is, "Oh, I've always wanted to learn how to do that." And I always come back with, "Well, why haven't you? What's holding you back?" And they go, "I don't know. I thought it was complicated." Well, it's not. Go do a little research and figure it out. Now, if you go listen to a lot of the quote unquote self-proclaimed gurus that are trying to dazzle you with all of their knowledge, they're just trying to sell you something that really doesn't put the odds in your favor. And that's why I say you only need one dependable, successful, accurate way of trading to make all the money you want. And I just think starting off trading options is a great way to get in with a small amount of money.
Yeah. And I'd love to mention the fact that you mentioned the gurus, right? Because a lot of the times these people, they join these different groups and stuff like that. And then they hop on a Discord chat and everyone, 7:00 hits, everyone hit trade right now. And it's like all these people, some of them may hit, some of them may not, but it's like, they're all just pretty much at the call of whatever person's leading the chat. And it's a lot of these chats are all like centered around just getting people in. It's almost like, I wouldn't call it a pyramid scheme, but borderline a pyramid scheme. And it's more centered around just getting people into the group versus actually teaching the people within the group to learn how to trade so that they can go out and fend for themselves. A lot of people are being handed fishes and not being taught how to fish.
There you go.
And at least from my personal experience, that's also what kind of steered me away from trading. That's just my personal experience.
That's very accurate, John. There's so many people that want you to listen to them. They want to go into a chat room and call trades or something. Well, how does that help you? What if the guy decides that he doesn't want to do it anymore, or he's no good at it, which most of them are? Then you're left with what? You have the challenge of finding somebody else. And how do you know if these people are successful?
Yeah.
Just you have to learn to do things yourself. That's my personal opinion.
100%. And one thing I kind of wanted to ask you, because this may drop a little bit of time before, we're actually recording this. So you mentioned earlier about the different markets, the trending, the markets where it's cyclical, and then the side-by-side, like staggered kind of markets. How does one start learning about these markets so that no matter what time it is in the world, whether they're listening to this when it drops or when it's maybe 2025, like they can identify the type of market that they're in and know how to best maneuver? I know you mentioned that this kind of it's etched in stone, and no matter what the market is, you have to keep by the same rules. But then also, how do you identify the market just so you're aware of what you're getting yourself into?
One of the things that I would suggest is you can find charting programs that are free. Mm-hmm. Frankly, I don't know a lot of the names. I think one of them is stockcharts.com. I'm not sure. I don't remember them, but there are plenty of free chart platforms out there. I think Yahoo Finance has one on their site. And go on there and build a 30-minute chart or an hour, a 60-minute chart, and just scroll back over the last month or so and look at and put an oscillator on there. Go put a MACD on there. I know I might be language to you right
foreign
now.
Language right now. Definitely foreign language.
They all come with a handful of off-the-shelf indicators. Just pick one. It doesn't really matter. Just pick one and put it up there, and you will see how they cycle. They're oscillators for a reason. They cycle from top to bottom. And when you see it doing this, during the day, it's a cycling market. If you see that indicator just doing this all day, it's a trending market. And if it's all choppy in the middle, that's your choppy sideways market. And that's the basics, the basic 3 types of markets. And a free chart will show you're not going to pick it up within 10 minutes, but you have to scrub back. All of a sudden, you're going to see the patterns. We human beings are really good at recognizing patterns and seeing shapes. It's like if you ever look up into the clouds, you go, hey, that cloud looks like a dog. Then somebody else looks at it and goes, hey, you're right, it does. We can visualize things pretty quickly. And you'll do the same thing with charts.
Yeah. And so then let me ask you, right? Because when it comes to trading, we kind of mentioned, all right, the $5,000 minimum. What do you suggest someone starts learning first so that they can get into it and make sure that when they are ready to get into it, let's say they have the money, right? They have the core philosophy, they put their emotions in check, right? And now they're ready to get into it. Where do they start learning so that this can not be a foreign language to them and they can just hop right in?
Well, we tell all of our students that this is approximately a 60-day program. We have all of the training videos in a members area that they have 24/7 access to. It takes them right from the beginning of how we do things and our philosophy. And the videos are intentionally short, 5-10 minutes, because when you're learning something like this, it's just like we just said, the foreign language. You're not going to sit down and learn a foreign language in an hour. It's going to take you some practice, take some time. I actually lived in Mexico for 4 years. My wife is Mexican. And when I moved there, I thought, oh, great, I'm going to be fluent in Spanish. I lived there 4 years. I still can't speak. I can order a beer and I can say please and thank you and all that. And that's about it. So don't look at it as this isn't a race. This is something that you need to take your time with, but you start off with the basics, watch a couple of the videos, then go sit in front of the charts. And like I said, a 60-day program is because we don't want you to get ahead of yourself. You want to learn. It's like the foundation. Learn the foundation first, and then you'll go from there. But it's the basics are what I said earlier. If we teach people how to be directional traders. What that means is, and this is what I said earlier, if we think the price is going up, we buy. If we think the price is going down, we short the market. Those are the calls and the put. And that really is that's as basic as it gets. And that way, when you start looking at a chart, which I'm looking at now, and you think, hey, the price is coming down to an area of support, there's a very high probability that the price is going to change direction and start going back up. And you'll see these patterns happen over and over and over again. So once you learn to spot these patterns, we teach 4 of them. That's it. You learn 4 of them, you're good. That's it. You don't need to learn anything else. This is a business of it's like rinse and repeat, repetitive. We do the same thing day in and day out, which to me is great because you don't have to learn a whole bunch of new things all the time.
It's that pattern recognition is what you're kind of getting at, right? And I love that you bring that up. And rest his soul, but Kobe was someone that worked on the fundamentals more than virtually everybody, and he is always working on his footwork, things like that, things that people often tend to overlook because it's not the flashy, fancy stuff.
Right?
Like it's the people who practice the fundamental the most, and they always say like success is it's boring. It's not sexy, right? It's not the Ferrari driving down the highway. It's very methodical, simple processes repeated over a long course of time.
Yep.
I think like Warren Buffett, who I think he said that he'd been reading like close to like 6 hours worth of financial statements every day virtually since like he was like I think a teenager, early teens or something like that. And his net worth is like insane to even think about. It's like, let me ask you though, how does one become, I guess master the shiny object syndrome and overcome that so that they can be okay in the mundane day to day of like just doing the regular simples that leads them to success, whether it's trading or whether it's whatever they're doing in life. Because a lot of times it's people get tired of the boring, and there's things that it's going to be boring in no matter what industry. Like for me in podcasting, like I don't like editing my episodes. Like I don't want to I like talking to people. I enjoy these conversations that we're having, but like the editing, creating the show notes, all that stuff, like, yeah, that stuff I generally do not enjoy at all. It's boring. It's tedious. It's time consuming, and I don't have an admin right now, so I have to do all of it myself. But it's like the same thing. I love the conversation. I love the things, the opportunity podcasting provides. So I can overcome those, I guess that shiny object syndrome, but I only did so pretty recently. But like for you, how were you able to kind of overcome that so that you could stick with the simple, the basics, the things that are proven to work time in, time out?
I'm going to say it's the realization that when you see your rules of engagement come to life on the screen, if A happens, B happens, and C happens, I should see the price go up or the price go down. And if you watch it, you say, hey, you know what? It did that. Now, if I make the decision to get it a little too soon, I'm jumping the gun, and I can't expect the positive outcome that if I waited for the proper time. And if you get in too late, you're playing catch up, and playing catch up is no fun because you feel like you missed out. And trading is all about timing. It's timing and direction. That's it. To simplify it into two things. It's first of all, looking at the charts, you know the direction that you're going to trade. So now you just have to figure out the timing. And we teach our students how to pinpoint the timing literally down to the penny of the stock. Hey, how do I know when to get in? There's so many newsletters that are sent out where they say, we like Apple, we like Facebook, we like NVIDIA, we like whatever it is, Netflix, and get in around this price right around 300. Well, what does that mean? Right around? Right. 298 is pretty close to 300, but if I paid 298 and you paid 300, you'd be mad. I got a $2 better share price. So we teach everybody how to do the same thing to trade the exact same way. I don't know if that answered your question.
No, it definitely does, because like it kind of definitely reemphasizes what we talked about earlier about all the trade groups that are just like telling people to buy in and then leaving. Because as you said, like if we don't hop in at the same time, we don't know how to pinpoint these different patterns and recognize the patterns, then it definitely screws us over in the long run, because we're going to be leaving either a lot of money on the table, or we might be, as you said, playing catch up, and then we might not even be making any money at all. So in terms of, you said timing and direction are the two things that people need to like learn so that they can get into trading. What about, on the topic of timing, how long does it take for someone, what does the schedule look like of someone like yourself who's a top trader? Because I know when the market's open at a certain time and they close at a certain time, and that all kind of impacts how you trade and when you trade. What can you tell us about timing in terms of like the hours in a day and how you schedule that?
Sure. Well, East Coast time, the market's open from 9:30 to 4. And we're talking about the New York Stock Exchange. And you don't need to sit in front of your computer all day. As a matter of fact, very few people actually want to do that. And I also believe and teach that the first 15 to 30 minutes after the opening bell, you should let that time pass and just sit and watch and let the market settle. And then you're going to start seeing patterns, because there's a lot of overnight orders that come in that affect the price right when the opening bell rings. This morning with Apple, in the first 5 minutes, there was a $1.10 price difference between the high and the low in the first 5 minutes. Now, that could be make a huge difference in someone's investment. And so if you just let the market settle, and then you start to see these cycles start to develop, that's when you start consulting your rules and taking the trades based on those rules.
Yeah. Really quickly, if you don't mind, just going a little bit deeper on the point where like $1 difference between the high and the low. From the outside looking in, that doesn't seem like much of a difference. How could that impact someone that much?
My average trade's 100 contracts. So a $1 move with 100 contracts is a $10,000 profit. Yeah. Now, if you're trading one contract, it's a 10-cent profit. So 10 contracts, it's $100. I'm sorry, it's $1,000. So again, that's the leverage that options trading provide, where again, if you spent $135,000 to buy 1,000 shares and it moved $1, you made $1,000. Nothing wrong with making $1,000 on a trade, but you had to invest $135,000 to do it. Whereas you can put up $3,000, and if the stock moves $1, you're not going to make the full dollar because you're only putting up about 3,000, but you'll typically make about 500. You'll make half of that 1,000. Now, simple math, you invest 3,000 and you make a $500 profit. Pretty good number, pretty high, very high return versus 1,000 with $135,000 investment. And that's what I love about this business is once you get good at it, you can not just invest 3,000, but you can invest 6 and then 12, and you're doubling your profit potential without increasing your risk. And I'm glad you asked this question, because one of the most important things in trading is protecting your capital preservation. And we teach with every trade, there's only a 15-cent stop on the option. It doesn't matter if you trade one contract or 500. You are getting in and you're putting your stop at 15 cents per contract. So if you on 10 contracts, you're going to risk $150. And the average profit being 3, 4, 5 times that amount, you don't have to be right that often to make money. And that's why you can't let those losing trades get to you. And that typically is something that just new traders go through. And it's a learning curve that every new trader is going to go through. It's expected. But then you realize, you know what? It's the law of averages. And the odds are really in my favor. So I'm just going to keep plugging. And that's when you scale, that's how you start to increase. And like I said earlier, we've got students they're just making obscene amounts of money trading. Not all of them. I want to make that crystal clear. Okay. They definitely are the top producers, but they're doing incredibly well because they recognize this, they're disciplined, and they started scaling their investment over time. And they didn't do it overnight. So,
there's one last question I kind of want to ask you. And you mentioned leveraging. A lot of people take that in the wrong light and think of leveraging as trading on the margin. For anyone that doesn't really know what that is, can you break that down and kind of give you a warning, I guess, to anyone that sees the Robinhood accounts, and because they pretty much let anyone trade on the margin these days. There's like no parameters around it. So like, can you give shed some light around there?
Sure. First of all, I think that the fact that they allow anybody to do that is irresponsible, because entrepreneurs, positive thinking people, they can be somewhat of dreamers also. So they tend to look at the positive side, the good side, and they don't give the negative side the respect that it deserves. So it's like, well, I'm going to get in this trade. If I invest $100, I might make $10. But Robinhood, or I shouldn't even say Robinhood, I'm going to take that back. A brokerage firm will give me another 100 on margin, so I can make $20. I put my 100 in, they put their 100 in. Well, if the trade goes against you, it's costing you double the amount of money. And that's the part that people tend to ignore. We don't trade on margin. I don't teach my students to trade on margin. You don't need to do it when you're trading options, because they are already the investment is so much smaller than actually buying the stock. And yes, they have an expiration date. And definition of an option is the right to buy or sell an asset at a predetermined price by a predetermined time. It expires at a predetermined time. So you have to, if you think the price is going to go up, it has to happen within the time frame that you own it and before it expires. But I don't like margin. I really don't. I think it's detrimental. It can hurt people more than help them. And if you are scaling and you're profitable, you don't need to borrow money. Just slow down on your building up your account size, and just wait till you build it up where you can buy more with your own money. You know, no need to borrow. Margin is just simply it's a trader's definition of borrowing money.
Yeah. It's one of those get rich quick things that often a lot of people fall victim to. And I'm glad you just shed some light around it. Todd, you dropped a lot of nuggets this entire episode. You made the idea of trading sound very simple and in a good way, right? In a way that people can grasp, because it's something, as I said, even for myself, it's something that is pretty complicated and something that I haven't really dove into too much, just because I got lost in the weeds. But you made it really simple and easy to understand, and I appreciate that. And so for anyone that wanted to get in contact with you and learn more about what you have going on, where can we find you at?
The easiest way to remember is tradewithtodd.com or wealthbuildersinstitute.com.
Amazing. And so now it's time for our final 5 questions, the question we ask every guest to wrap up the show. Question number 1, what is the most impactful lesson that you've learned in life?
Wow. I picture the frog that's holding the pelican's neck, or his head's in his mouth or something, and he says, never, ever, ever give up. And I think that's it. It's just never give up. If you are doing something that you believe in, don't listen to the people around you and never give up.
Amazing. What is the most admirable trait a person can have?
Admirable trait?
Yes.
It is integrity with the way it's like the way you do anything is the way you do everything. So if you have integrity, it will cover all bases throughout life, and people know that, and they know that they can do a deal with you on a handshake. I'm the type of guy that can do a deal on a handshake. Several times the hand that I was shaking couldn't, but I didn't know it at the time. But I didn't let that take me off of my game in terms of I'm still a man of my word. I'm still going to do things with integrity. And I think that's really, really important. I know it's really important.
If you had to change someone's life with one book, which book would you recommend?
Oh, I'm a terrible person to ask about books.
Here,
I'll tell you this, because I believe that, and this is the one book that really, really changed my business life. Okay.
Yeah.
I'm going to kind of segment it into business. The book is Scientific Advertising by Claude Hopkins and My Life in Advertising. And after reading that book, my previous business, it put me right on track. And that's it. That's my answer.
Okay, no worries. Question number 4. What is the legacy that you're trying to leave behind?
One that I'm an old guy with a 13-year-old son. Okay. And my son, he's sharp as a tack. Every parent thinks their kid's smart, but mine really is. I immediately go to him. When you ask that question, I immediately think about him and raising him right. And ask me the question again, please.
What is the legacy that you're trying to leave behind?
That you can, and I'm going to equate trading in here as well. You can do whatever you set your mind to. And I know that sounds cliche, but I want people to think, you know what? That guy found the key to the safe or the combination to the safe, and he shared it with a whole bunch of other people. And I don't know if that's a definition, but
it's a great answer. It falls right in line with one of my quotes that I hold near and dear to my heart, which is the duty of the enlightened is to enlighten the unenlightened.
There you go.
So it's exactly kind of in line with what you're saying. And the final question of the show is, for anyone, no matter where they're at in their life right now, what is the first step that they need to take in order to get on their way to building a wealthy life?
There's a video that I saw 6 or 8 months ago, went around. I think a lot of people saw it, where I believe it was some sort of an admiral or something on a ship. And he says, first thing you do when you get up in the morning is make your bed. Have you seen that video?
Yeah.
He's make your bed. Why? Because you're setting the stage for the day. It's a little job well done, a little sense of accomplishment. I think way too many people sit on the sidelines waiting for the right time to start something. And to me, that's stinking thinking. If you want to do something, and it's the old, all these old lines are popping into my head. No time like the present. Just start. It's like Nike. Just do it. Get up and do it. You will fail, but falling on your face is expected, and those are where the lessons are learned. You don't really learn a lot when you win. You learn an exponential amount when you lose, and those lessons stick with you because they sting, and they're necessary to being or becoming successful.
Todd, you dropped a ton of amazing advice. Thank you once again for hopping on. Thank you once again for sharing your stories, your lessons, your expertise with us. And I appreciate you hopping on the show and just giving all the value that you did today.
You're welcome. And thank you for having me. I appreciate it, John.